Hi there, pro traders, and welcome to another Monday market review with GoPro Trading Academy, being held by yours truly, Ian Giffen, as always, and bringing you the updates in terms of what we did last week, as well as the view ahead for the week's trading. The first thing I'd like to say is that if you're enjoying our material, please remember to subscribe to our channel. That way you'll also be notified if you hit that notifications bell of the new professional trading that we bring out as we bring it out. And also, if you enjoy this video, please don't forget to hit the like button as well. Right, so a quick recap last week, another very quiet week of trading. We did have a few exploratory trades, I guess you might say, in terms of what our strategies required us to do, but not that much has actually transpired. And also, where we did have a bit of movement the week before, particularly on GBP weakness, that pretty much evaporated in the latter part of last week. So a pretty dead market at the moment, so it shouldn't take us too long to run through these pairs, starting, as always, with the Euro USD on the weekly time frame. I would say, of course, that we can say with this that we had that bearish impulse candle on the Euro. Following on from our previous identification, as you'll remember from our videos a few weeks ago, of that resistance level was support, but a pretty solid resistance level, respected with quite a lot of testing over a period of 2 weeks. The prior week, the week before last, where we had pretty much just a spinning top, has followed through now with a bearish resumption. And that's not something that we predicted so much, but it certainly conforms to what we always talk about with our technical analysis, and that's to look to see what price does around these levels. So that's certainly providing a few setups for our strategies, dropping down, first of all, to the daily time frame. Let me just make sure that I get that up in a big chart. There we go. On the daily, that weekly bearish impulse candle literally being made up of 1 day's move last week, Wednesday, which also gave us a breakout of our 13 candle four-wave channel on the daily time frame. So that led us to look for trade setups last week, Thursday, on H4 time frame. It was also potentially a setup for daily impulse, but as you guys know, we don't like to jump into trades where the entry is a long way away from the stop. So we have our ATR rule for that, but we also have an upper limitation, and that certainly exceeded that. But it still allowed us to drop down to an execution time frame on H4, where there were a couple of opportunities. Now you can see again, as I mentioned on Friday, things started fizzling out. This phase two, well, it's a wave on the daily time frame. Looking at the cyclicity here on H4, no big surprise. Again, that's typical of any trend where we look for a retracement. So for those folks trading hybrid strategies, looking for a potential setup here already today, depending on it, whether you are happy to accept class 3 and 4 patterns, certainly on a hybrid, you should be looking at class 3 as a minimum. But yeah, it can be a bit frustrating at times when you have a breakout like that, where it doesn't really give you much of an opportunity to get in. But we did have a couple of other instruments where we saw similar movement that were a little bit kinder to us. So here on cable, though, last week, not as impressive as we saw in the Euro. Yes, we are in a weak trend. We are outside of the channel. Last week, closing pretty much in line with the previous support level over here. So looking to see whether we get this a full-on bearish resumption here on the weekly time frame. So that bearish move on weekly looking like this on daily. So folks who do trade the class 1 WM patterns on the selection time frame would have noted last week that we had a potential. Well, we've had class 1 patterns here for quite some time, and certainly whilst we were in that phase 2, that retracement, certainly hybrid traders would have been looking to see this phase 2 come to an end, and looking to do that using the hybrid strategy on the execution time frame. And that took place in this area over here. Certainly, that was even a late setup. This was a potential setup. The only thing that stopped us getting into a hybrid trade here using class 3 patterns, of course, was the fact that the candle closed high up in the price territory of that candle. But we got a nice class 2 setup over here, which was an obvious short for this one. So a nice bearish hybrid there. Again, folks looking to take advantage of that move on the impulse strategies may have found it a little bit frustrating. Certainly a potential setup over here. But remember, we look for valid setups, and neither of these 2 candles or 3 candles preceding that constituted a valid pullback. So making it even more frustrating, of course, would be in the fact that we had a setup here and that trade just didn't work out. Once again, into this phase 2, this looking at the cyclicity here on this time frame, phase 2 wave on daily, and potentially again looking for the breakdown in that bullish cyclicity, looking for another bearish hybrid initially, and a continuation would give us some trades for the H4 impulse. Right, so Dolly Yen pretty dead. That bullish move having come to a definite end in last week's candle, ringing the previous week's high. So absolutely nothing further for us to do on that one. Dollar Swiss, a lot of weakness here. Yes, on the weekly time frame, we had that bullish impulse candle bringing a previous low. Now, technically, this is still a trend because we've not yet had a breakdown in bullish cyclicity after that initial breakout. But bear in mind, it's very weak, so we typically don't look to trade weakness at all. And here you can see on the daily time frame as well, we just had a reversal pattern over here, so not much happening. Anyone who trading the strategies, the overlay strategies, looking for the end of this over here, may have gotten somewhere around there, but typically that doesn't form a core part of our rule set. Certainly not looking to catch a continuation in a weak trend. Right, USD Cad, this over here, class 4 W pattern, deep inside the channel, nothing valid for us to look at there at all. And likewise, even on the daily time frame, the only thing we could say is that we did get a pretty much a valid W pattern here to look to go long on this one. Didn't really give us much of an opportunity to do that, however. So we didn't take any trades on USD Cad last week. Having said that, if I just go back to that quickly, this is still potentially, for those who trade exclusively WM patterns, you would be looking out for a class 1 W here. So this retracement coming to an end, looking for a bullish resumption on that, assuming that you don't mind trading inside of the channel. Aussie on a weekly, so we've had 2 bearish impulse candles in the weekly time frame. Still technically in a weak bullish trend here, but no opportunity to look to trade this, and that represented by what's in fact a class 1 M pattern here on the daily time frame. So we can't use this for execution, but certainly as a selection time frame, this was very interesting for us. So last week where we had the rollover, we had a bearish impulse candle over here. What was that, Tuesday, I think it was, and immediately looking to then, assuming once again that you're trading class 1 WM patterns only, that you'd be happy to take those trades. That being the case, you would have dropped down to your execution time frame on H4. This was a picture perfect hybrid setup at the close of the midday to 4 p.m. candle here on the 9th of this month, and entering at the open of that candle over there. So using our trading stop methodology, we survived that spike over there, which would have taken out any entries on an H4 impulse, unfortunately. But the hybrid worked very well, and using a trading stop on that one, managed to put in around a 4-to-1 reward to risk ratio on that winner. So a nice trade there. Kiwi, nothing doing really. We haven't traded this now for some time. You can see that really the market has been languishing in a consolidation area here for several weeks here on the daily time frame. But we did get this bearish move last week, the latter part of last week. Yes, we're in a retracement now. And again, we could drop down to execution here for traders who are trading only those WM patterns, and look to identify breakdown and cyclicity here using our rule set for the hybrid strategy. So quite a lot of opportunity, as you can see, across these US dollar pairs to do that. Moving to our yen crosses here on Euro Yen, you can see on weekly we are in in fact, last week's bearish impulse candle really precluded a a future class 1 W pattern. So that's kind of off the table for using weekly as selection time frame. However, on daily, that bearish move last week, again, here another class 1 M pattern allowed us to start looking for trades here. So there wasn't anything on hybrid, but once we got some momentum going with this bearish move last week, H4 impulse was definitely on the cards, and you can see that this trader has actually taken one, which is a good thing. So this is an evaluation account for the funded trader program. So looking to trade relatively small, very small position sizes as they get through their evaluation stage. So a bit of a pullback through the latter part of obviously Friday evening and first part of today being Monday. But we are obviously using our trading stop methodology. And remember, we're looking for lower closes all the way through. That didn't happen here as we had a bit of a gap. So even though it looks like there's 3 lower closes with the black candles, that's actually not the case. So trading stop, however, should be movable at the close of this candle to, well, almost to break even. So reducing risk on that massively in a couple of hours time. Once that does roll over, if that does roll over, obviously, that'd be great, giving us a chance to get a really solid winner on this one. Otherwise, we'll be out for pretty much a break-even trade. So that's the name of the game when you're trading a convex strategy. Okay, so here on Gbp Yen, the twisted sister, as it's called, we did get a close inside that previous waves price territory. So no potential class 1 W pattern here anymore with that pretty pathetic candle last week. However, having said that, we did get that marginal breakout. It's not a strong trend. Clearly, it's weak. So not looking to use this at this point in time as a selection time frame. However, again, here on the daily time frame, using it as selection, then there was a possibility for looking for trades here as the market started rolling over last week, but it came to a very quick end and didn't really give us anything to work with, so we didn't get any trades there. And you can see if today closes anywhere where it is now, and admittedly there's quite a long way to go still before that happens, then we will have the end of this very short impulse wave. It is still technically a bearish trend, but if you're looking at WM patterns, but that would preclude well, in fact, we already cannot say that we would get a class 1 M pattern because of the close there inside that previous price territory. So as price action traders, remember, we're always looking to see what price does around these support and resistance levels. Right, so a much prettier picture, obviously, on Swiss yen, or that Swiss franc strength that we had through the course of several weeks last month. Has kept us well outside of the channel. Yes, last week was a follow through on a retracement wave here on the weekly time frame. So yes, we are in that retracement phase 2. Ring that higher last week's bearish candle as well. It was a bearish impulse candle, but nevertheless looking to see if that comes to an end to allow us to start trading any continuation of that bullish trend. You can see that phase 2 here on the daily time frame. So bearish cyclicity still technically intact marginally, but if we have a bullish or a higher high here today above the Friday's high, it would ring that low, meaning that the cyclicity has broken down. That would be a setup on this nice support level over here for potentially for a bullish hybrid if you use class 3 patterns on your execution time frame. So keep an eye out for that. So that's pretty much all we can do there. We can't use this at the moment for our selection time frame. We did look at that for a couple of days through the latter part of last week because that was a class 1 M pattern. In fact, Friday was the only day where you could have looked at that. But we didn't get any trades on this one either. Cad Yen similarly, but not quite as strong because we did get those couple of closes just inside of the channel. Look, it is still certainly a potential class 1 W pattern stacking up here. So if you get a close outside of the channel, as long as you don't want that final box ticked where you require C close to be outside the channel as well, then you're happy to go bullish here again, looking to execute potentially here on the daily time frame. So a very similar picture to what we saw on the Swiss yen. Support level being respected. Are we seeing a breakdown in this bearish cyclicity? Well, certainly if we do then that would be certainly using multi-time frame technical analysis. We should get plenty of opportunities, first for a hybrid, and if that follows through, then for daily impulse. At the moment, nothing though to do there with the lower time frames. Aussie Yen, as you can see, we sort of have a progression of weakness here across these yen crosses. This one having failed to break through that resistance level, as we know, through the course of the last 4 weeks or so. Also in this phase 2, still a valid class 1 or potential class 1 W pattern. It's a strong class 4 M pattern. So again, you know, if we get this phase 2 coming to an end, that would signal us to go long. The only thing we could look at for this week again would be a bullish hybrid on that if we're using the daily time frame for our execution. However, daily for selection time frame, we've certainly got class 1 M pattern still intact here. So keep an eye out for that. This low now being ringed through the course of today because we had these 2 inside candles at the end of last week. That low being ringed, looking for the breakdown in cyclicity, however, first, unless, of course, you're really aggressive with your hybrids and trade class 4 patterns. However, we typically would look for a class 3. So breakdown in cyclicity, phase 2, and then a bullish impulse candle. Should that follow through, of course, then we potentially could well be trading impulse, daily impulse trades on this sometime next week. Looking at this for our selection time frame, it is bearish though, not bullish. So at the moment we're in a phase 2 here. So you would drop down to execution time frame of H4, looking for a breakdown and bullish cyclicity here to short the market. So here's an example where looking across different time frames, the 2 different selection time frames of weekly and daily, we'd be trading in opposite directions. Nothing wrong with that at all. And the last of our yen crosses here on Kiwi, similar picture, but that historical Kiwi strength showing itself with price being maintaining itself pretty much outside of that channel. That close, I think, closed marginally on the inside. Let's have a look for 195 compared to a high 183. Yeah, so less than a pip, in fact, inside that channel. So if you're prepared to forgive that, then again, looking for a breakdown in this bearish cyclicity on the execution time frame, which here would be daily. So looking for an end of this phase 2, basically. So bearish cyclicity still intact here on the daily time frame, which means once again no setup available for us to go long as yet. So if I just switch to the correct chart here on the daily time frame, you'll see that that bearish cyclicity is very much still intact. And we don't at the moment have, well, we certainly through the course of last week weren't able to trade this with a class 2M pattern, but unless we get a close inside that price territory, which may well happen, of course, even today, if it manages to stay outside, the closes stay outside that price territory, then we're looking at a class 1 or potential class 1 M pattern, once again allowing us to short this market using the H4 as our selection time frame. If you're looking at a hybrid, you're looking for a breakdown in this cyclicity here on the H4 time frame with that bearish impulse candle giving us the signal for our execution. Right, so moving on to Euro crosses, the Euro GBP, pretty much a dead dog last week, just a small bearish retracement, inside bar as well here on the weekly time frame. And you can see that that cyclicity that we had, thanks to the GBP weakness, broke down through the latter course of last week. So nothing doing there. I think there was a trade that we took using H4 as our execution time frame to look to catch the bullish continuation here. But I think we got stopped out pretty much for break even on that as the market rolled over on Friday. So it just didn't follow through. Right, Euro Swiss last week giving us another lower low. Interesting week. If you look at this time frame, of course, we're still in the bearish phase 1, well outside of the channel. We haven't yet had any cyclicity form to show us whether we're going to get a class 1 M pattern here. But for channel traders, then certainly they've been trading this for quite some time. And I know that a few of you folks using advanced targeting as well got into this relatively early on, I think somewhere up here, and you're still in a bearish trade here. Last week didn't give you any continuation really. but we may well be seeing that happen today. So let's wait and see on that. Remember, trade management above all helps you to lock in that profit. If you were trading standard targets, though, you would have got a winner there, but then you would have probably been sucked into a trade over here for trade number 2 in this trend, and of course that didn't work out. But you would have had quite a chunky winner followed by a small loser. So that's again convexity working for you. Euro Cad really flat as a pancake. You can see it here on both the daily and the weekly time frame. So we haven't been looking at that at all. Euro Aussie, also a phase 2 here. We spoke about this a week ago. Last week's candle on the weekly time frame showing a bit of a breakdown in that bullish cyclicity, or at least a potential breakdown, which looks like is actually now happening today. So let's keep an eye on that one. If this does roll over again, potential bearish hybrid. But if that does follow through after that, of course, then we'd be looking to trade that on the daily impulse as well. But nothing at the moment for us to use daily as selection time frame. So the only thing we're really interested in is daily for execution and our weekly for selection. Right, so again, Kiwi strength historically over the last month and a bit, we're seeing ourselves much further outside of the channel than on the equivalent Aussie pair. So again, phase 2 over here, retracement coming back up towards that resistance level, still some way away from it. So it's a very nice, it's a strong class 4W pattern at the moment, which should we get an end of the retracement, means we're going to move into a class 1M pattern, which would allow us to drop down, of course, to our execution time frame on daily to trade that. So if you're looking for a hybrid on this, well, if you're using class 3 M patterns for your hybrid, then should we get a bearish impulse candle at the close of today, well, that would be A for a wait. We've got a potential class 3 M pattern stacking up. In fact, with the lower low forms through the course of the early part of today already, looks like we've pretty much got that already. If that is also an impulse candle, then you've got a bearish hybrid setup over there. So doesn't have quite the same strength, with this being pretty much a flat phase 2. In other words, a range on this time frame. But nevertheless, it would be a valid setup for that. Should that work out to be a continuation, then we'd be able to follow that up and scale in with some daily impulse trades. Nothing for us to do here with this is selection time frame and lower time frames for execution, thanks to that ranging market. Right, so pound crosses, I mentioned before that on our GBP pairs, that GBP weakness fizzling out through the latter part of last week. So last week's bullish candle here reflecting that. If we drop down to the price action here on daily time frame, you can see it was pretty much a mess. Last week, Monday, coming straight back up, and then any continuation running out of steam, with that Thursday's low being ringed by the end of the week. So there's nothing really for us to do there any longer. GBP Cad, you're going to see this across all of the pound pairs. This very much a class 1M pattern. With that lower low last week, we're still in that. We're still in the bearish phase 1 of that if you're using single time frame analysis. But if you're using dual time frame analysis, that cyclicity has broken down, which means that the wave has broken down. So technically, again, here we're in a phase 2 wave. If we see any kind of bearish resumption over here, we'd be looking to trade that, but there's not much else to look at, quite frankly, at the moment. Gbp Aussie, here we're also seeing a valid, well, a strong class 4W pattern leading to a potentially valid class 1M pattern, but we are also in a phase 2. So you can see that this is pretty typical across the market for last week, all of this phase 2 price action. But again, looking at this time frame, class 3 M pattern stacking up. If today were to even close where it is now, that would be a valid short if you are trading the hybrids, which you must remember are pretty convex, very big winners, but quite a high frequency of losers. So you need to make sure that your trading mindset is rock solid in order to trade that strategy. If we get a resumption in this bearish cyclicity here on daily, we'd be able to drop down to the H4 time frame to execute our H4 impulse there as well. And the last of the GBP crosses, similar picture as I mentioned before, that historical Kiwi strength, keeping these these Kiwi pairs further outside of their channels. But again, looking at last week's bullish candle here, if you're using single time frame analysis, that's still a bearish phase one wave. And dual time frame, dual time frame analysis, we still have that, in fact, because bearish cyclicity is in fact still intact here. Whether we get a bearish resumption or not, we will have to wait and see. But should we get a bearish impulse candle, it is for a way for a daily impulse, because we have this bearish cyclicity still intact. It wouldn't be a class 1 entry, it'd be class 2, but that is not untypical for the execution time frame for the impulse trade. So that's that one. We need to see that roll over in order to be able to trade that on the lower time frame. If you're looking to trade a hybrid here, it would be an H4 hybrid, looking to identify the end of that retracement wave. So dropping down here to the H4 time frame, you'll see that that has actually already happened. And we had the setup here. What candle is this? This was the final candle of the week. So if you were really aggressive with your trading, you would have entered first thing this morning with your initial stop above that fractal high. So you wouldn't have been able to trail the stop just yet, but you should certainly be able to do that before the end of today. If you're looking to take advantage of that, now is still fine, because we're still pretty much at that same price level. And you can see that this bullish cyclicity having broken down, we're not really seeing we haven't yet seen a resumption in bearish cyclicity, but with the fact that we've seen this trend line being broken, there is no problem with getting involved with this again. And even if you wait until the end of this candle to see if it's a bearish impulse candle, shorting the market again with a stop now above that high, absolutely, that is something that you could look to do. So looking a little bit more interesting on GBP NZD than it has done for a while. Right, so moving on to our other crosses here on Cad Swiss. We discussed a week ago that we had a close inside that price territory. So apart from the fact that we're deep inside the channel, we've no longer got the possibility of a class 1 W pattern, only class 2. So we can't use that for a selection time frame. And likewise here last week, you can see is really a nothing burger. It's just respected the support level throughout the entirety of last week. And we're not seeing anything else really happen except possibly this wave coming to an end with a higher high by the end of today, potentially, meaning that this bearish cyclicity has come to an end. So don't know why I'm spending that much time on that pair, because we're really not interested in it. Aussie Swiss, likewise here on weekly, nothing. The best we can hope for is a class 2W, that being a weak class 4M pattern. And here on the daily time frame, yes, we were looking at this through the course of last week to short the market. Again, fizzled out. Had you had any trading opportunities here, then you should be out of them long time ago. That bearish continuation, well, it didn't actually follow through. So Friday closing back inside of the previous phase 2's price territory. So nothing valid for us to look at there looking forward. Aussie Cad flat again on weekly. You could see we really just had something of a doji there. And although there was some price movement through the course of last week, nothing that we could really use even here on daily time frame for selection, thanks to that weakness that we saw with the candle on the 8th last week, Monday. So that just closed way back inside of that previous wave's price territory, meaning that we couldn't actually look to trade it, and probably just as well. Aussie Kiwi, the last of our Aussie pairs. Here we're looking at weekly time frame. Last week was just a load test. There's nothing here for us to do at all. If we do get this resistance level respected without a close inside that price territory, then looking forward, maybe next week or the week after, we may well look to start shorting this market again. But nothing for now. And here on daily, likewise, you can see it just pulled straight back inside of that price territory. Folks who are looking to trade a hybrid, I think may have gotten in here, was that last week, the beginning of last week? Let's have a quick look. Certainly with the breakdown in this cyclicity, you may well have shorted the market over here. That would have been a class 4 entry though. So anyone waiting for a class 3, we didn't actually get anything. And you can see now this phase 2, very solid bullish cyclicity in place. We're not interested in that at all. Right, our last two Kiwi crosses here are Kiwi Swiss. Last week's weekly candle pretty much reflecting the fact that there was nothing for us to do at all. And likewise, Kiwi Cad, similar picture, a bit of a high test last week, but nothing happening on that time frame. And when you look down here at the daily, we had a brief moment or glimmer of action as we got an outside close, but immediately the following day, last week Tuesday, coming back inside of that channel and leaving us with nothing to look at. So that's all the currency pairs. Just a quick look at gold. Folks would have made some decent money out of gold. Just looking at weekly first. So we've had two bullish impulse candles here on the weekly time frame. And you know, we can't use weekly as a selection time frame, but definitely on daily through the course of last week we did. So anyone who is trading the past evaluation stage, then you should certainly have made the most out of that move with your H4 impulse trades on gold. The stock markets, though, a different story. Just looking at weekly again, last week showing here on the Dow that we've potentially come to an end of this bullish impulse wave. And certainly if you look here at the daily time frame, cyclicity is still intact. So that wave is still intact, but we weren't able really to do anything through the course of last week with this pullback. If you are trading daily impulse, the daily impulse strategy, then you'd be looking for an impulse candle here to give you the go ahead. Last week, Friday, just being a bullish candle, but an inside candle, and certainly no, certainly was not an impulse candle. But this is still a class one, well, potential class one W pattern. In fact, today's higher high makes it that. So let's wait and see. It could fizzle out immediately. If this rolls over and comes down again, it would be a complete breakdown in cyclicity, and that would be the end of that bullish trend, and therefore that bullish wave on weekly. But looking for a little bit more strength, you'll notice, as always, that both the S&P and the Nasdaq tend to have more directional momentum. So weekly time frame, again, just a bit of a low test doji there on weekly, and an inside bar as well. So dropping down to daily time frame, similar kind of picture, but if you're trading the daily impulse, you would have actually entered this morning with a bullish trade here. Valid class one W pattern now again. I could actually advance this analysis to show that. Absolutely valid. So all of our rules met here for a daily impulse. And the only thing that, in fact, there's nothing keeping you out of this. We've got outside close, C close on weekly. So all of the boxes have been ticked for a bullish daily impulse here. So you should certainly be long there already. And then finally, looking at our Nasdaq, you'll see that we had that inside bar there as well on a weekly time frame. So that high is not ringed. Bear that in mind. And this wave can only really be deemed to have come to an end should we have a breakdown in sequentiality of cyclicity here on the lower time frame, which we most certainly have not, and almost exactly the same as the S&P 500. Those of you trading the portfolio manager accounts on the funded account program, you should certainly be long here as well this morning. Look out for correlation, as always, between these pairs. We know that, but as long as you're managing your risk effectively, that shouldn't be a problem. Right, so folks, that's it from me. Pretty quiet across the board, certainly on the currencies. As you can see, the indices, there's a little bit more action. And gold produced a nice trade, a couple of trades last week, as did, I think, the Aussie USD and a couple of others. So not altogether a bad week. Very quiet, has to be said, very quiet indeed. But that's what being a good trader is all about, is knowing when to do nothing. Right, folks. So again, if you're not already a subscriber to our channel, we do bring out professional trading on a regular basis. So make sure that you subscribe and hit that notifications bell so that you are notified as soon as it comes out. And once again, if you've enjoyed this, please don't forget to hit that like button. You'd be helping me. I'd really appreciate that. And yeah, look out for our material coming up through the latter part of the week and certainly into next week again. All right, folks, that's it from me. Have a fantastic week's trading. I'll chat to you all soon. Bye for now.